Hello friends, good morning to all of you, and today in this video we are going to cover another chapter from the module A of the AFM, that is accounting and financial management for bankers. And module A, I already told you, is very much important, but let me tell you that there is lesser weightage toward the chapter number 10 and chapter number 11, right? So up to chapter number 9, all the 9 chapters are very much important, so make sure that you need to watch this video till end. And if you have not gone through the previous videos, those all videos are available on our application and through the website. So you should be visiting the website at the earliest, that is iibf.info /app. You can be downloading the application from there and start your preparation. So make sure that you are hearing me out. Please do confirm the audio video quality at the earliest so that we can proceed, right? And this is going to be the 10th video for the AFM, sorry, 11th video for the AFM. So please do confirm the audio video quality at the earliest. So what do you mean by lending? So banks basically are acting as intermediary. Now what are intermediary? That they are going to take the deposits from the investors or from the depositors and going to invest them into investments, or are going to basically lend it to the borrowers, right? So that's about the bank. So banks are the intermediary, and banks do lend for the purpose of what? For the purpose of economic profits. Definitely the banks want to basically generate profit out of it. So we need to understand the different type of loan products which are there, right? So the retail loans are basically meant for the individual customers. Let's say when the bank want to offer the loan product to the individual, then it will be a retail loan. It will be a retail loan like housing loan, or it could be a credit card loan. All these types of loans are the retail loans, right? And when a large amount of sum is given, like a comparatively larger amount is given to a corporate, that is said to be a commercial loan. That is said to be a commercial loan. Let's say 1000 crore of loan is given like to XYZ industries. That will be what? That will be a commercial loan, right? And on the other hand, we are having the type like the term loans could be there, or the CC limit can be there. Now in case of the term loan, there is a fixed repayment schedule that we are to repay the installments in a given tenure, right? Let's say the tenure is 7 years and we are to pay the car loan insurance, car loan installments is to be paid. That will be what? That will be a term loan, right? And case of CC limit, it will be a revolving limit which will be sanctioned. A revolving limit. You can be depositing the amount anytime, you can be withdrawing the amount anytime. That will be the CC limit. And also there are the fund-based facilities and the non-fund-based facilities. Important to understand. Now just try to understand this point. Now when we are talking about the fund-based facilities, it means there is direct outlay of fund. There is direct outlay of the fund, right? And when we are saying there is direct outlay of fund, it means the immediate cash disbursement is there. Like in the case of CC limit, in case of the term loan, immediate cash disbursement is there. But in case of the non-fund based facility, there is no immediate cash flow, or cash disbursement is not immediate, right? It may be contingent in nature, like the bank has issued a undertaking, the bank has given a bank guarantee. Now the bank has not paid the amount yet, right? But if the guarantee is invoked, and in that scenario the bank is to pay the amount, otherwise not. So we can take the examples like letter of credit or the bank guarantee. These are the examples of the non-fund based facilities. And when we are talking about the fund based facilities, when we are talking about the fund-based facilities like term loan or CC limit or loan against property, whatsoever you name it as a general product, those are the fund-based facilities, right? Now we need to understand the types of the borrowers. The types of the borrowers, like individual is there, or sole proprietary firm is there. For individual, like whatsoever the persons are there, like let's say personal loan is to be given, or let's say a home loan is to be given, those are all are given to individual customers. And sole proprietary firm is equivalent in capacity to the individual person, but loan is given to proprietary firm over there, right? And further, it is a partnership firm or a joint venture could be there, where there is a group of 2 or more persons which are there for a common purpose, right? And they have a deed between them, an agreement between them, right? They will be working for a common profit or common base purpose. That's a partnership firm. And about the HF, I already told you, that is a Hindu undivided family. There is a one karta who is the eldest member of the family. It could be male or female, and there are other co-partners in the family. And one important point in case of HUF, who is to execute the documents? Kindly do answer at the earliest. If you answer it all right and comment over here, you may be getting a chance to get free course for the AFM, questions pack for the AFM. Do answer at the earliest. Who need to execute the documents in case of the HUF? It is a karta and the co-partners, because it's not mandatory for the co-partners, but there is a common practice among the banks that the documents must be executed by the co-partners also. Why so? Because if the co-partners do execute the documents, they do sign on the documents, they also became uh, liable toward the bank, personally liable toward the bank. Otherwise, the liability of the co-partners is limited to their share in the ancestral property, right? But in case of karta, the liability is unlimited. For karta, it is unlimited liability, but for co-partners, it's not the unlimited liability. So as to make the co-partners also personally liable, it is a common practice among the banks that when they are to lend some money to HUF, then they basically go for co-partners also, that you should also be executing the documents, that you should also be executing the documents, right? Further, we read about the companies, we read about the statutory corporations, trust, cooperatives, and societies. So these are the different type of the persons, right? And now the laws are applicable on all these individuals or different borrowers, but the different laws will be applicable. Like for individuals, those are governed under the Indian Contract Act. For partnership firm, under the Partnership Act. For HUF, under the customary laws pertaining to the Hindus. For companies, under the Companies Act. For statutory corporations, by the acts which are created by them, by the statutory corporation acts, right? Like for LIC, the rules will be applicable as per the LIC Act and so on, right? And further, for the trusts, those are governed by the Indian Trust Act, Public Trust Act, Religious and Charitable Endowment Act, Waqf Act, right? For cooperative societies, by the Cooperative Societies Act or the Societies Registration Act. So on the different type of persons, the different type of acts would be applicable. Clear so far? Now, let's talk about the funding credit facility. I already gave you the example related to it, so we won't be, going that much for the funded based facilities. So there, when there is a direct outlay of the fund, it is said to be fund based facility, like term loan, CC limit, demand loans, bill purchase discounting, or anything, right? That those all cover under it. And when we are talking about the non fund based facilities, it could be the letter of credit, co-acceptance, bank guarantee, deferred payment guarantee. What does it indicate? It indicates that there is no direct outlay of the fund so far, right? But these non-fund based facilities are what? These are contingent in nature. Now, what is contingency? It may be the case that the liability may crystallize in the near future. And when the liability will be crystallizing, in that case, there will be an outlay of the fund. There will be outflow of the fund, and that is a non-fund based credit. Now let's understand the types of the securities. Now the security could be the primary security, or it could be a collateral or the secondary security. Let's say the case, a loan is given to a shopkeeper. Here is a shopkeeper who is having a stock amount of rupees 10 lakh. 10 lakh rupees of the stock is to be created, and based upon this stock the loan is to be given, right? Now the stock will be purchased by the shopkeeper, right? So a charge of hypothecation will be created. So a charge of hypothecation will be created. In case of hypothecation, the possession is with the borrower, the ownership is with the lender, right? So the borrower is going to keep the stock with him, and a charge will be created upon that stock. That is a charge of hypothecation. Now this is a primary security which is available. This is a primary security, right? So primary security indicates what? It's basically a security acquired by the borrower with the bank finance. So in case of the housing loan, what is acquired by the borrower through the finance? It is a house. So for housing loan, the primary security will be the house itself. In case of the housing loan I'm talking about. In case of a car loan, the hypothecation on the car would be a primary security or a collateral security. Do answer. Definitely it's going to be a primary security. Why? Because using the bank funds, bank finance, you purchase the car itself. You purchase the car itself. Just keep in mind. So if it is acquired using the bank finance and the charge is created, then it will be primary security, right? And for the collateral security would be an additional security which will be provided by the customer. Additional security which will be provided by the customer, which will be giving a extra cushion to the bank in case of the default. So if there is default, then it will be going to help as a extra cushion. So let's say case you basically took a loan for housing purpose. Now charge is created on the house, so that will be a primary security. Mortgage is created, so that will be a primary security. And other than that, the bank also asked from some other security, additional security. The customer gave a FDR and a charge was created on FDR. That will be a collateral security. That will be a collateral security. For housing loan I'm talking about. Primary security would be on the house itself. Okay, now let's understand the different type of securities and charges. For immovable property, the charge which is created is what? It is a mortgage. In case of mortgage, how many parties are there? In case of mortgage, how many parties are there? One, it is mortgager, and the other one, it is mortgagee. Now, the pledge is a charge which is created in case of the movable goods. Movable goods. In case of pledge, the possession is with the lender. The possession is with the lender, right? And in case of lien, it's about the securities or goods. The lien charge is created in case of the securities or goods. And in case of hypothecation, the charge created on movable goods. Assignment is the charge which is created on actionable claims. It is created on actionable claims. And further, right of set off and the right of appropriation, these are the superior rights which are available to the bank. These are the superior rights which are available to the bank. Now, if we talk about the charges, it could be a fixed charge which can be there, or it could be a floating charge. Now, when we are talking about the fixed charge, it means the underlying value of the asset may vary, but the charge amount will not be varying. If the charge is created on, let's say, 1 lakh rupees, then that particular charge is not going to vary. That is going to be a fixed charge, right? So if it is created on a specific identifiable fixed asset, then it is said to be fixed charge, right? But when we are talking about the floating charge, right, it means charge is created on the class of the assets that are changing in nature, which is going to change the value. Let's say you created a charge on stock. You created a charge on stock. Now the underlying stock value is going to change. It may be changing. It may be changing, right? Now the particular thing will be the charge which will be created, that will be floating charge. It could be the stock, it could be work in progress, it could be finished goods, it could be trade receivables, right? That type of charge. And it could also be a pari passu charge. Important. It may be asked in the exam. Pari passu charge. Now, it may be the case that a borrower is a large corporate borrower. Let's just assume, right? XYZ borrower is there and he is having an asset amounting rupees 250 crore. And he took a loan from different lenders like A, B, C, D are 4 lenders. From A, he took a amount of rupees 25 crore. From B, amounting 50 crore, 60 crore and 70 crore, right? Now the asset is to be charged to these lenders proportionately to the amount which is lent by them. A charge is created now by the multiple lenders. by two or more lenders, right, on the same asset, without the priority over each other. There is no priority related to A is having more priority or B is having lesser priority. That's not the case. Charge is created over the same asset. That will be what? That will be the pari passu charge. Is that clear? Further, it's related to the margin on security and the LTV. Margin on security. Loan to value ratio. So normally, banks are not going to provide finance up to the extent of the full value of the asset. Let's say the asset is valuing rupees 5 lakh, your car is valuing rupees 5 lakh. The bank is not going to give you finance amount rupees 5 lakh. Not going to happen, right? Because the values may be volatile. There can be a depreciation in the value of the security, right? So banks are to maintain a margin. Let's say for the housing loan purposes, the margin is 20%. The minimum margin is 20%, let's say. Let's just assume. Let's say for the car loan, the margin is 10%. Now the 90% value can be financed by the banks, right? But the 10% is to be contributed by the borrower. That the initial amount which is to be contributed by the borrower is said to be the margin. And what do you mean by LTV? LTV is loan to value ratio. LTV is loan to value ratio. The maximum amount which can be given, that is a LTV. So it's kind of the same thing that we have to maintain the margin. Let's say your house is a total worth of 50 lakh. The loan is to be given and the total worth is, let's say, 100 lakhs. Now the LTV would be what? 50%. It is in percentages. So LTV will be 50%. Now what is it indicating? Out of the 100% of the value, the 50% of the loan is given. This is what it is. So if the bank is maintaining a suitable margin, definitely the bank can managing the risk upfront somehow. The bank would be able to manage the risk upfront somehow. Right so far? Please do confirm. Are you clear with these points so far? Now after that, there is a one important topic, that is a priority sector loan. Very much important. Now the banks are to sanction loans for the different categories, but there are some categories where the requirement is basically stated by the government itself, that the banks are to lend to these particular sectors. There are total 8 sectors: agriculture, micro, small, medium enterprises, housing, education, renewable energy, social infrastructure, weaker section, others, right? So total 8 priority sector lending sectors are there. And here is a nutshell guidelines related to these. So we are going to read about this. Now the target is fixed based upon the criteria of ANBC or CEOBSC. CEOBSC. Now what is ANBC or CEOBSC? Now ANBC is adjusted net bank credit. The bank credit is to be netted, it is to be adjusted, and then it will become ANBC, adjusted net bank credit. And CEOBSC is what? It is credit equivalent of off balance sheet exposures. ANBC is adjusted net bank credit. CEOBSC is credit equivalent of off balance sheet exposures. Right? So whichever is higher, for that particular case, the priority sector lending target is to be maintained. Now, based upon the different classes of the banks, the targets are different. Like for the domestic commercial banks, right? And for the foreign banks who are having the branches 20 or more in India, the overall priority sector lending target is 40% of the ANBC or CEOBSC. The overall target is 40%. Let's say if the ANBC is 100 crore and CEOBSC is 70 crore. So ANBC is 100 crore, CEOBSC is 70 crore. The target for the domestic commercial bank would be what? It will be 40% of the higher one. The higher side is A and BC. So it will be 40% of the A and BC, 100 crore. So that will be 40 crore. So overall 40 crore target is to be maintained. I'm just taking an example, right? And even the sub targets are there. Like for the agriculture purpose, the sub target is 18%. For agriculture purpose, the sub target is 18%. Now 18% of the A and B cities, not out of the 40 crore. The target is from A and B C only, right? So 18% of 100 crore means 18%. 18% means 18 crore. That will go toward the agriculture. That will go toward the agriculture, right? And NCF means what? NCF means net credit to farmers. So out of this 40%, out of this 100 crore, 14% minimum should be the net credit that should be given to the farmers. Like it could be a direct credit to the individual farmers, or it could be an indirect credit so as to support the agriculture, right? It may be a crop loan for the crop loan purposes, or it could be for the allied activities purposes, or for even the agriculture infrastructure purposes, so as to directly benefit the farmers or indirectly benefit the farmers, right? So 14% should be for the direct benefit or indirect benefit of the farmers, and minimum 10% should be 10%. 10% out of this 14% should be to the small and marginal farmers. Now you may get confused, but let me just clarify this to you. So 40% is the overall target for the commercial banks, scheduled commercial banks, whichever is higher of ANBC or CEO BSC, and 18% is a target toward the agriculture, and 10% is a target toward the small marginal farmers. Now, what is the definition for the small farmer and the marginal farmer? These questions may be asked in the exam. Now, for the marginal farmer, the definition is if the land holding is up to 2.5 acre. SMF is what? This is small marginal farmer. So the land holding, LH, I'm writing over here, is up to 1 hectare. If it is up to 1 hectare, then it is marginal farmer. Then it is marginal farmer if the land holding is up to 1 hectare, or we can simply say 1 hectare is equal to 2.5 acre, right? 2.5 acre. And if the land holding is greater than 1 hectare up to 2 hectare, then it is small farmer. Means if the land holding is beyond 2.5 acre, greater than 2.5 acre, and up to 5 greater than 2.5 acre and up to 5 acres, then it is small farmer. So that's the definition related to the marginal farmer and the small farmer. I hope that you have understood. Is that clear? Please confirm. Right? And now for MSC, micro small enterprise. MSE, micro small enterprise. The target is for micro enterprises, not small enterprises. It is for micro enterprises only. The target is 7.5%. And for weaker section, the target is 12%. These are the overall targets we are learning about right now. And for those foreign banks who are having branches lesser than 20 in India, the overall target is 40%, but the sub targets not applicable. Like for the foreign banks which were having the branches 20 or greater than 20 in India, the same target as of the domestic commercial banks were applicable, but that's not the case in case of the foreign banks with branches lesser than 20 in India. So the sub targets are not applicable, but the overall target is 40%. 40%, and out of this 40% in total, we can say the 32% can go toward the export credit and 8% in any of the other credit sectors, and in 8% toward any of the other sectors under the priority sector lending, right? But the total target, the total exposure toward the, let's say, total PSL exposure toward the medium enterprises and social infrastructure plus renewable energy is counted up to 15% only. There is a sub limit also. There is a restriction also, that if they are lending toward the export credit up to 32%, that's applicable toward the PSL. But their overall target, basically in 8%, that should not be more than 15% toward the medium enterprises, toward the social infrastructure, toward the renewable energy, right? That's basically related to the targets for the foreign banks with lesser than 20 branches. Then it's about the regional rural banks, RRBs. For RRBs, the overall target is 75%. Also for the small finance banks, the overall target is 75%. The sub target for agriculture is all same. This is related to agriculture. The sub target for agriculture is all same. It is 18%, right? And for the micro enterprises, it is 7.5%. And further for the weaker section, whereas in the case of the domestic commercial banks, it was 12%, but in case of the RRBs, it is 15%. Kindly please take a note. In case of the regional rural banks, it is 15% and not 12%, right? And what about the small finance banks? All same as of the domestic commercial banks, but the overall target is not 40%, it is 75%. So the overall target is 75%. For agriculture, it is 18%. For micro enterprises, 7.5%, and for weaker section, 12%. Clear with it? Please confirm. Please do confirm at the earliest. Are you able to understand these points so far? These limits are very much important, so make sure that you remember it. And if you want to get the PDF file, just WhatsApp me AFM and I'll be sharing the PDF file of today's lecture. Other than that, there is a category related to the urban cooperative banks, which is not mentioned over here, but let me mention that for you. It is UCB, that is urban cooperative banks. Now for the urban cooperative banks, the total PSL is what? The total priority sector lending is limited to 60%. Previously, it was said to be that it is to be up to 75%, but now it is restricted to 60%. For micro enterprises, again, it is same 7.5%. For weaker section, it is all same to be at 12%, right? And there is a criteria related to where the higher or lower percentage weightage will be given. So there is a criteria which is set by the Reserve Bank of India. Now, Reserve Bank of India basically looked at the point that the banks are lending specifically to the particular areas only. And it has basically led to the situation that in some areas, the PSL per capita, the priority sector lending credit per capita is more than the thresholds, So basically they decided that for the areas where the priority sector lending per capita is greater than 42,000, let me write over here. So they say that in priority sector lending per capita in those district is greater than 42,000. In that scenario, weightage is to be given to 90% only. Weightage is given to 90% only. And for those areas where the priority sector lending per capita is lesser than 9,000, there the weightage will be given to 125%. Means if you even sanctioned or loan of rupees 1 crore in that particular area where the priority sector lending per capita is lesser than 9,000 crore, it will be counted as 1.25 crore. Whereas if you lend the amount rupees in that particular area where the priority sector lending per capita is greater than 42,000 crore, even though you lent rupees 1 crore, it will be counted as rupees 90 lakh only, right? So that's the case. Now, let's have a look at the subsector targets. First one, it's related to the agriculture. It is related to the agriculture. Now, I told you the subsectors are already that for marginal farmers, for small farmers category, I already told you what is the definition related to it and all, right? And there is a point related to warehouse receipt loans, negotiable warehouse receipts, and electronic negotiable warehouse receipt, right? Now, for warehouse receipt loans, that is limited up to rupees 90 lakh per borrower, limited up to rupees 90 lakh per borrower. And when it is related to known NWR or known ENWR, then it will be 60 lakh rupees per borrower. The limit is 60 lakh rupees per borrower. And if you are lending toward the farmer produce organization or farmer produce companies, right, in aggregate, the 4 crore rupees borrower limit is there. And if you're lending them for the input marketing purposes, machinery purposes, then the limit is rupees 10 crore per borrower purposes. And for agriculture infrastructure, let's say agro processing units, the limit is rupees 100 crore per borrower, right? Is that clear to you? Right? So let me just reiterate this thing. So for warehouse receipt, NWR or ENWR, the limit is 90 lakh. But if it is not negotiable, non NWR, in that scenario, limited up to 60 lakh rupees. If you're lending to corporate farmers, right, for aggregate purposes, for general purposes, it is 4 crore rupees per borrower. But otherwise, if you're lending if you're lending to the FPOs or FPCs, then the limit is rupees 10 crore. And for agriculture infrastructure, it is rupees 100 crore per borrower. For micro, small, medium enterprises, the limit is overall and toward the startup. So if the startup is even there in case of agriculture, the limit is 50 crore. For startup up to 50 crore, that is accountable toward the priority sector lending if you're lending to the priority sector to the startups. And also for the MSMEs, if you are lending toward the startups, it will be accountable up to rupees 50 crore. But for other case, there is no specific limit. Otherwise, there is no specific cap for the same. And what about the export credit? For the general banks, there should be 2% of the incremental credit toward the export. That's the target for the export sector. For export sector, the target is 2% incremental toward the export credit over the corresponding date from the previous year. Like on the previous year, 31st March, your overall lending toward the export was 1,000 crore. Now this year, at the same date, you have to extend it up to rupees 1020 crore. Incremental credit of at least 2% should be there, right? Of 2% of the ANBC or CEBOSC, whichever is higher. And per borrower limit is there. Per borrower limit is said to be 50 crore. That will be accountable toward the priority sector lending. That will be accounting toward the priority sector lending. But this is for the domestic banks and the foreign banks who are having the branches greater than or equal to 20. Means we are talking about the commercial banks. We are talking about the foreign banks with branches 20 or more than in India. We are talking about the small finance banks. We are talking about the urban cooperative banks. So that will be limit for this. And when we are talking about the banks, foreign banks, which are having the branches lesser than 20 in India, the overall target is 32% maximum that you can be lending in exports. It is 32%. And per borrower limit won't be applicable here. Per borrower limit won't be applicable here. What about the education loans? I already told you. It is 25 lakh rupees per borrower, which you can count toward education loan category, right? Which you can count toward the education loan category. And then it's related to housing. It's related to housing. Now just pay attention toward it. Very important. So when we're talking about the purchase or construction, when we are talking about the purchase or construction, you should be keeping in mind that there are three types of the centers based upon which the limits are there. The first one, it's related to those centers where the population is greater than or equal to 50 lakh. That's the first center, where the population is greater than or more than 50 lakh. That this is the first one. The second one, it's related to where the population is greater than or equal to 10 lakh, greater than or equal to 10 lakh, but is lesser than 50 lakh. Lesser than 50 lakh. That's the second center. The third center is where the population is lesser than 10 lakh rupees. That would be the third center. Right? That's the one criteria. One of the three criteria. So there are in total three criteria. The first criteria is related to the population. The second criteria is related to the maximum dwelling cost. So in case of the centers where the population is greater than or equal to 50 lakh, the maximum dwelling cost is restricted to 63 lakh rupees. It is restricted to 63 lakh rupees. And in the second category, it is restricted to 57 lakh rupees. And in the third category, it is restricted to 44 lakh rupees. So these are the same limits. These will be the same limits. Even when we are talking about for the construction or purchase of the house, or even for the repair purposes, if the loan is sanctioned, both are accountable for the priority sector lending purpose, right? So the first criteria is related to the population. Second criteria is related to the maximum dwelling cost, right? Now the loan amount is limited to rupees 50 lakh in the first category, 45 in the second category, and 35 in the third category. And if it is for repair purposes, I'm writing over here, if it is for repair purposes, for the first case where the population is more than or equal to 50 lakh, maximum dwelling cost is limited to 63 lakh rupees, it is 15 lakh rupees. For the second category where the population is more than or equal to 10 lakh and lesser than 50 lakh, and the maximum dwelling cost is limited to 57 lakh, the repair amount loan is limited to rupees 12 lakh. And for the third category where the population is less than 10 lakh and maximum dwelling cost is limited to 44 lakh, and further the repair loan is given up to rupees 10 lakh, it will be covered under the priority sector lending category. Clear for that? Kindly to confirm. So wherever you are having the total amount, total population, three categories, three center wise, population wise, maximum dwelling cost wise, and third would be the loan limit. So if these three criteria are met, then according to that, it will be covered under the priority sector lending. Okay. Further, it's related to the social infrastructure. Social infrastructure. So if you're lending for schools, sanitation, drinking water, then it will be covered under the priority sector lending, and the limit is rupees 8 crore per borrower. It is 8 crore per borrower. But if it is related to healthcare facilities from tier 2 to tier 6 centers, then the limit is rupees 12 crore per borrower. Right? Further, it's related to the renewable energy. It is related to the renewable energy. So if you're lending for power generators, public utilities like street lighting, remote village electrification and all, the limit is rupees 35 crore rupees per borrower. Kindly please take a note of these all. If you want to get the PDF file, just do WhatsApp me writing AFM update and WhatsApp it to the number 83609444207. Right? For the renewable energy, the limit is rupees 35 crore per borrower. And for the individual household, the limit is rupees 10 lakh per borrower. For individual household, it is rupees 10 lakh per borrower for renewable energy. And if it is based on power generators, public utilities, it is limited to rupees 35 crore rupees per borrower. Right? In that scenario, it will be rupees 35 crore rupees per borrower. Getting that point? So this is very much important to understand. And after that, we are having the other sector. Now, in case of others, we go for the loans which are basically, let's say, sanctioned to the individuals or farmers. Not to the farmers, but to the individuals, to the SHGs, to the JLGs. Those will be covered. To the distressed persons, that is also covered, right? Distressed, if a loan up to rupees 1 lakh is given to the distressed person, means let's say you have taken a loan from the non-institutional borrower, right? In that scenario, a debt swap can be given so as to protect the borrowers, so as to protect the persons, people from the higher interest rates. So in that scenario, amount of rupees 1 lakh per borrower can be advanced, right? And further, for the microfinance loans where the household income is up to rupees 3 lakh rupees, for the microfinance loans I'm talking about, if the loan is up to rupees 3 lakh, family income, household income we are talking about is rupees 3 lakh, and monthly repayment obligation is limited to 50% of the monthly household income, right? And a loan is given, then that will also be accountable toward the others category, and further we are having the weaker section category. Weaker section category. No, if you're lending to small farmers and marginal farmers, that is accountable toward it. That is accountable toward the weaker section. Now you'll be saying there was a sublimit also. Yes, that the sublimit is applicable, still applicable. That was 10%. That will be applicable. But if you're having surplus, that can be accountable toward the weaker section. So the banks have to select the head in which they want to count the particular lending toward, right? So if they're counting it toward the weaker section, it will be accountable toward the weaker section. If they are accounting it toward the agriculture, then it will be accountable toward the agriculture, right? And that particular composition or let's say definition cannot be changed throughout the year once they have basically said that this particular account will be accountable toward this head, right? So if you're lending to small farmers, marginal farmers, that is accountable toward it. If you're lending to the artisans, or let's say to the KVI, Khadi Village Industries, that will be accountable toward it. If you're lending under the government schemes, the government sponsored schemes, like we read under the DRI advances, or let's say the NULM, under the NULM or NRLM, if you're lending, or under the SRMS, we already have read about these schemes, na? NULM, NRLM. Now, NULM is National Urban Livelihood Mission, and NRLM is National Rural Livelihood Mission. And further, it could be also the SRMS scheme about the manual scavengers, or it could be also be DRI advance, differential rate of interest scheme. If you are lending to SC/STs, scheduled castes, scheduled tribes, right? If you're lending to the JLGs, joint liability groups or self-help groups, right? Even if you're lending to the women beneficiaries up to rupees 2 lakh, let's say you are lending to women beneficiaries up to rupees 2 lakh, that will be accountable. Or you're lending to the distressed persons other than the farmers or person with the disabilities, those all will be accountable. And even if you're lending to the PMJDY accounts, Pradhan Mantri Jan Dhan Yojana accounts, up to rupees 10,000, that will be eligible under the weaker section categorization, right? So that's about the priority sector lending. That's very much important from the exam point of view also. Further, it's related to the Fair Practices Code. Now, the guidelines related to the fair practices, that the minimum standards which are to be followed are given by the Reserve Bank of India, and these are related to the application for the loans, processing of the loans, how the loan appraisal is to be done, how the disbursement will be done, post disbursement criteria, what will be there, general guidelines related to that there should not be any kind of discrimination for the gender, caste, religion, etc. So these are the minimum standards which are to be followed. That is a fair practice codes. So these are the minimum standards. So when we are talking about the fair practice codes, we are talking about the minimum standards to be followed, right? Further, it's related to the operational process of loans in the banks. Operational process. Under the FPC, we are going to read about all operational process of loans in the bank. So what is actually being done? Once the applicant will be apply for the loan, first of all, first step would be the applicant would be apply for the loan, and the bank should be acknowledging that we have received the application, right? So the application along with the supporting documents and all the required information should be furnished by the applicant, and the concerned staff is going to ensure that the documents are obtained and acknowledgement is to be given. Acknowledgement is also required. All right, that's basically receipt of loan application. So if you are having any register where the it is to be written that you have received an application, you should be giving that receipt number, you should be giving that acknowledgement number, so that person can refer to that particular acknowledgement number thereafter for the communication purposes, right? And the second one is related to assessment of viability. We have to check that whether the project is accessible or not, it is basically viable or not. And also we have to check the credit worthiness of the borrower. For that particular purpose, we are going to take the CIBIL report. That is said to be, we are going to check the from the credit rating agency. Credit rating agency. No, credit rating agencies are different. See, we are going to go for the CIC, Credit Information Company. There are two different terms. One, it is a credit rating agency, and the other one, it is a credit information company. When I'm talking about the CIBIL or Experian or something, that's a CIC, Credit Information Company, right? And when we are talking about the credit rating agency, those are going to rate the different products, the different borrowers, right? Rating is different. That's basically required in case of the commercial judgments. Like in the case, let's say when the company is going to issue the commercial papers, then they have to get the credit rating, right? That's different. Credit information is just like that we want to get the information related to whatsoever the loans, whatsoever the credits which have been advanced to that particular person by the different banks or NBFCs, right? So for the assessment of viability, we also need to check the credit worthiness for the same. We need to evaluate the proposal, right, keeping in view the which some of the directions are given by the regulator. Those are also to be checked. And after that, if everything is all fine, then we are going to sanction the loan. We will be sanctioning the loan, and for sanctioning purposes, there will be execution of the documents. There will be execution of the documents. Execution means that the borrower is to sign the documents. That the borrower is to sign the documents. That's the execution of the documents. That is to be done. And once the documents have been executed, right, then after that there will be disbursement. So once you have done the documentation, after that it will be the disbursement. Disbursement is like that there is outflow of the fund from the loan amount now. That's the disbursement is. Now the disbursement could be the borrower directly, or it could be the third party vendor also. And the process is not completed yet. After that, you need to do the post loan sanction verifications, that whatsoever the amount which was sanctioned, for what purpose it has been sanctioned or disbursed, is it used for the intended purpose only, right? And each bank is having their own system and own procedure for the same, for the supervision purposes. Further, the loans which are payable over the period of time, let's say CC limit is sanctioned for 3 years, but it is to be renewed on annual basis. Now that is to be done. That is also to be done. Now let's have a look at the methods of assessment of the loans. Methods of assessment of the loans. Now for the commercial loans, where the repayment period is very much long, we do require specialized skills for the assessment purpose. Assessment is just like that we want to check that repaying capacity of the person. Assessment covers all the points. We want to check the repayment capacity. We want to check the viability of the project. We want to check the economic feasibility of the check. The management is basically capable of the same or not. Everything is to be checked, right? So for that particular purpose, we should be having the specialized skills when we're talking about the commercial loans. For the retail loan purposes, there is a standardized process. In general, there is a standardized process. Like in the case of the car loan these days, even the loans are sanctioned in just 1 minute or 5 minutes. How that is being done? They do just ask you so as to upload a few documents. Let's say they asked you to upload the ITRs. They asked you to basically upload your KYC documents, and further that a specified standard criteria is there, that if the score is above this threshold, let's say you are having the scores above 700 and you are having ITR above rupees 10 lakh, right, this amount can be sanctioned and this will be the repayment period. Everything will be standardized. Now the loans are technology driven, right? Why? Because large volume of loans are to be sanctioned, but the ticket size is low. The small amount of loans are there. But in case of the commercial loans, the amount is very in a very big amount. There is a very big amount. Let's say it's a quantum of 500 crore or 600 crores, right? Now in that scenario, there is a specialized skill is required. But for the retail loans, it's a standardized process. And standardization is in everything, not only just related to application forms, terms and conditions and all, but it could be related to the processing of loans also, right? Like I just told you. Further, it's related to assessment of the working capital or the CMA formats. Now, the many banks do follow the CMA data, means the credit monitoring arrangement formats. They will be looking for the CMA format, and they will be looking into the variations, that what are the variations related to the cash flows, or let's say the fund flow, what is a deviation related to it. They will be looking into that particular thing, and based upon that they'll make their judgments, right? So that's the case, and that the all that we are to cover today, and the rest part we will be covering tomorrow. So do not miss the session tomorrow. So we'll be covering from here onwards tomorrow basis, that will be related to part 2 for chapter 9, right? So just in a day or two maximally, we will be covering the complete module A, and after that we are going to start with the module B. Again, it is going to be very much important, so make sure to watch the sessions on daily basis. And if you want to get the PDF file, you can get the same. Just give me a moment. Okay, so if you want to get the PDF file, in that scenario you just need to WhatsApp me on the number A3609 right? Just do mention AFM and WhatsApp it to this number, right? And I'll be sending you all the details. Thank you so much and have a nice day. Happy learning.